Welcome to the deep dive. Today, we're really pulling back the curtain on the energy sector. It's a world that's not just complex, right? It's also fiercely adapting, undergoing some pretty profound shifts.
Absolutely.
So we're going to try and unravel how companies are, well, almost defying gravity in these volatile markets, what that means for M&A mergers and acquisitions, which can be pretty cutthroat, and, who's actually leading the charge in innovation.
Yeah.
This isn't just about, staying informed. It's really about understanding the playbook for tomorrow.
Precisely. And our mission here for this deep dive is essentially to pull out the most important nuggets of knowledge from the sources we have. One gives us a look at the current upstream M&A outlook, and the other gets into comprehensive business solutions from a company called EAG Inc. Understanding both these sides, it's absolutely crucial if you want to stay properly informed in this industry. It just keeps changing.
It really does. So maybe let's start by zooming out a bit. Get the big picture story, shaping upstream oil and gas. I found this statistic pretty striking. Between 2014 and 2023, U.S. upstream companies, they actually increased their net income by 7%.
Right.
Even while oil prices dropped 18%. That feels, counterintuitive, doesn't it? Like hitting a home run blindfolded. What's that tell us about how adaptable they are?
Well, what's really insightful there is that this resilience isn't just about weathering storms. It's more proactive restructuring. The key takeaway, even with big price drops, companies that really master capital discipline and embrace digital transformation, they can actually boost profitability. It's a fundamental shift, really, in how success is even defined. Upstream operators have definitely renewed their priorities. They're intensifying focus on efficiency, leveraging things like AI, advanced tech, optimizing costs, production, and we're also seeing a clear resurgence in resource capture strategies. Things like conventional exploration, selective deals for immediate reserve additions. It signals a very deliberate shift towards portfolio longevity.
Okay, so it's basically about spending smarter, not just spending less. That makes sense. Sounds like a powerful pivot. And speaking of interesting developments, these balancing acts, we should probably talk about the natural gas market, particularly Australia.
Ah, yes.
They're doing this comprehensive review, right, of their domestic gas security mechanism, the wholesale price cap, all aimed at tackling projected domestic gas shortages by 2028.
Are they kind of walking a tightrope there?
Yeah.
Between their own needs and global partners? They absolutely are. It raises that important question of balance, doesn't it?
Yeah.
The review is considering some pretty significant policy shifts.
Right.
Like a domestic reservation scheme, maybe even underwriting LNG imports.
Wow.
And you can imagine these potential changes. They're raising serious concerns among the LNG producers. Worries about impacts on exports, on international investment. It just underscores that tightrope governments walk. Between ensuring domestic energy security and fulfilling those global market commitments.
Yeah, tricky stuff. Okay, let's pivot now to the M&A landscape, because 2025, it's shaping up to be what some are calling a year of recalibration for upstream M&A. It actually kicked off incredibly strong. We saw $17 billion in deals in just Q1 2025. That's the second best start since 2018.
Pretty impressive start.
Yeah. And some really significant transactions, too, like Diamondback Energy buying Double Eagle via their vol in the Permian Basin at that crucial area, right?
Yeah.
Texas, New Mexico. That was $4.08 billion.
Huge deal.
And then a $4.3 billion drop down to Viper Energy. I mean, those two deals alone, nearly half the quarter's total value.
But, and here's the critical insight, I think, beyond those headline-grabbing mega deals, the M&A market isn't just slowing down.
Yeah.
It's fundamentally recalibrating.
Okay.
It's less about sheer volume now, more about a painstaking, really selective hunt for the perfect fit. And that's happening amidst scarce, high-priced inventory.
Right.
So buyers, they're facing limited acquisition opportunities, steeper asset prices. It's definitely setting the stage for a potential slowdown. And the key drivers shaping this more cautious climate, they're pretty clear. First, like we said, scarcity of high-quality inventory, especially in the Permian. Prime shale acreage is just increasingly hard to come by, drives up valuations a lot. Second, sellers are reluctant to lower prices. They know the value of what they've got left.
Yeah.
Meanwhile, buyers are constrained, right? Weaker crude prices and the tighter capital discipline.
Yeah.
And finally, to general market volatility, falling oil prices, equity prices, makes aggressive deal-making much harder to justify. So you get this kind of strategic standoff between buyers and sellers.
A strategic staring contest, when nobody wants to blink first.
Pretty much, yeah.
So given that standoff, is there a risk deal activity just grinds to a halt? Or will companies figure out new ways to, break the deadlock?
That's a great question, and it brings us to the sort of global and regional picture. North America,
Yeah.
clearly still the epicenter for upstream M&A, nearly $80 billion in market opportunities there. But activity is moderating after that big cycle of mega mergers.
Okay.
But opportunities, they absolutely remain, especially for agile operators. Companies willing to think a bit differently. Look at South America, for instance. Saw a real surge in deal values in 2024. But the prospects there are, well, pretty mixed now. Shifting regional strategies, halted divestment programs by big players like Petrobras.
Right.
And then globally, you've got fiscal and geopolitical challenges weighing things down too. Middle East tensions, the conflict in Ukraine, that undeniably impacts overall deal activity.
Okay, so what does all this actually mean for folks trying to navigate this complex environment? How do you even play this game when the rules feel like they're shifting under your feet?
It means doubling down on strategies for success amidst all this uncertainty. Conventional plays, for example, they saw 57 deals, about $6.25 billion in Q1. So these assets, they offer crucial entry points for companies maybe priced out of that premium shale.
Ah, interesting.
And we're also seeing a call for more creative deal structures, maybe targeting less consolidated basins, leveraging undeveloped inventory, forming strategic partnerships. Those can help unlock value. Ultimately, buyers are just becoming much more discerning, focusing on selective acquisitions, assets with strong cash flow potential, clear operational synergies. It's really about precision now, not just volume.
Precision, not volume. I like that. And this is where I get genuinely curious. How are companies actually doing this?
Yeah.
Because it's one thing to talk strategy, right? But implementing it, especially when efficiency and integration are so critical, that's another story. Which brings us to companies like EAG Inc. They partner with organizations across the board, mining, upstream, midstream, renewables, even support companies. And their mission seems pretty clear: to be the industry's first choice for consulting services and outsourcing.
And look, their track record, it really backs that up. EG has over 20 years of experience. They successfully complete over 100 engagements a year. And get this, an impressive 80% client rehire rate after the first engagement.
Wow, 80% is high.
It is. It's not just about providing services, right? It reflects deep industry expertise, a real dedication to exceeding what clients expect. They're addressing the how, which is, like you said, the crux of the modern energy business.
So their core services: consulting, back office outsourcing, IT outsourcing, and software as a service. How do those specific offerings help energy companies tackle the shifts we've been talking about? The efficiency drive, the M&A integration.
Well, they step in to help solve those, quote, toughest business challenges. How? By automating and optimizing processes, improving data reliability, which is huge, transforming raw data into valuable information.
Okay.
Leveraging industry experts, optimizing IT infrastructure. And this connects directly back to that renewed industry focus on efficiency and digital transformation we talked about earlier.
Right.
Companies just need these capabilities to navigate effectively right now and to capitalize on those selective acquisition opportunities when they arise.
Yeah, you can really see how EAG's insights line up with what the industry needs. I mean, even their outlines for articles seem to hit the nail on the head. Things like maximizing ROI through IT outsourcing and energy operations. That's pure efficiency drive. Cybersecurity in oil and gas. Protecting critical infrastructure addresses those growing threats. And navigating mergers and acquisitions, ensuring seamless integration in oil and gas. That's directly relevant to our M&A chat.
It really highlights how companies like EAG contribute to navigating these complex events, doesn't it?
Yeah.
And they'll be active at key conferences in 2025, too, like the Inverus EVLV conference in Houston this May that focuses on SaaS platforms, analytics, business automation, for energy producers and suppliers.
Okay.
Then there's NAPAC, the North American Petroleum Accounting Conference in Dallas, also May. Great for educational sessions, insights for petroleum pros. And in June, the IFS Connect conference in Nashville. They'll be discussing industrial AI, maximizing IFS investment. These events just underscore that ongoing need, right, for knowledge, for networking, for practical solutions in the sector. Shows exactly how these strategic partnerships get forged and refined.
We've definitely covered a lot of ground today, from those big macro trends shaping energy down into the nitty-gritty of upstream M&A, and then into how strategic partners like EAG Inc. are providing some critical solutions.
Yeah.
It feels pretty clear that success in this kind of environment, it really hinges on disciplined evaluation, agility, and forging the right partnerships.
Absolutely. And, given this significant shift we're seeing from what was described as exuberant consolidation to a market now marked by selectivity, caution, and innovation in upstream M&A, makes you wonder, how might the very definition of a successful energy company evolve in the coming years,
Yeah.
particularly in how it approaches technology adoption in these strategic partnerships? What new metrics might even emerge to define true triumph in this sort of recalibrated landscape?
That's a fantastic question to leave everyone with. Really something to ponder as we wrap up. Thank you so much for joining us on this deep dive today. We hope you found it insightful, and we definitely encourage you to keep exploring these fascinating topics.